when I started the firm, it was really predicated on the fact that insurance is a huge global industry, $6 trillion, depending on how you're looking to measure it. So it's as large as other parts of financial services. But if you look at the volume of investment going into InsurTech versus broader fintech, it's substantially lower, typically sitting at one-tenth. The other sort of key factor is that when you look at the use of technology and the level of innovation, insurance is arguably still 10 to 15 years behind other parts of financial services. There's a huge amount of legacy infrastructure, but at the same time, insurance is so pervasive, it impacts all areas of the economy. It's just too important to be left behind. So those sort of key macro factors was our view that this is a very attractive part of the market, and one where with the right investment strategy can be very very successful.
Hello, everyone. Welcome to Tracxn's interview podcast series, The Sourcing Stack. My name is Vinay. I lead investor partnerships for EMEA at Tracxn. Through this series, we speak with leading investors across Europe to understand how venture capital is evolving and where the next generation of transformative companies will come from. Today, I am pleased to be joined by Sam Evans, partner at EOS Ventures, a global venture capital firm focused on insurance technology and related sectors. Prior to joining EOS, Sam spent many years at KPMG, where he led the global deal discovery advisory business for insurance. Over the course of his career, he has worked on more than $75 billion US dollars worth of insurance transactions across markets, including Australia, Hong Kong, Switzerland, and the UK. That global perspective, combined with deep expertise in insurance markets, gives him a unique vantage point on how technology is reshaping on one of the world's largest financial industries. Sam, welcome, and great to have you with us today.
Yeah, thank you. Thank you for inviting me.
Great. Now, to start with your career journey and perspective, you've spent many years advising on insurance transactions globally before moving into venture capital. What motivated the transition from advising incumbents to backing startups?
Yeah, so this was really the start of EOS back in 2016. So as you say, previously I've been working with KPMG, lucky enough to work around the world with many of the large global insurance organizations. And if you remember, back in 2016, InsurTech was starting to emerge as a standalone sector within fintech and broader financial services. So yeah, I thought it would be a good time to step away from, as you say, the advising side of the world and create a venture capital platform to focus exclusively on InsurTech. We were one of the first to do that. Hindsight's a great thing, and timing was perfect. So we were able to navigate the challenges of raising a first-time fund, given the strategic appetite and interest from incumbents who, at that point, struggling to navigate a very new and emerging part of their ecosystem. So that was the genesis. Since then, the platform's really grown. We're launching our third fund in early part of this year. We launched a private credit platform back in 2025. So yeah, from those very early beginnings, we've created a very focused, very dedicated platform, focused on this part of the market.
Great. Happy to hear many milestones of EOS as well. That's a fascinating shift from working with large institutions to supporting early stage innovation. Given your global exposure to the insurance industry, having worked across markets like Australia, Hong Kong, Switzerland, and the UK, what differences have you observed in how innovation happens in insurance across regions?
Yeah, no, it's a really interesting question. I'm very lucky to have that experience. So I've probably worked in the most sophisticated and mature parts of the insurance market, with closed book live transactions in the London market, for example, versus I don't know, Ivory Coast and parts of North Africa, where very nascent insurance industry. So that was a great experience. For context now, the way we look at sort of global exposure, our primary markets are UK, US, and Europe, but we do allocate up to 20% of our funds to rest of world. So we have investments in India and Latin America, for example, at the moment. So yeah, I think generally the 80-20 rule applies. So you see a lot of consistency, a lot of similarities, and I think the ability to transition businesses from one market to another will generally hold. However, you do need to be very cognizant of the fact that markets can be fundamentally different. So the distribution landscape, even the underlying products, and how customers look to engage with insurance can vary significantly. Obviously, the regulatory environments as well can look very different. So I think as long as you're aware of those differences and how that would impact on your business model, you have the ability to look at sort of overseas market expansion. Even if you look at the US, given the state-based regulation, that's 50 different markets. The UK and the US personalized distribution landscapes look fundamentally different. So even going from UK to US is not an easy step to make.
Right. These regional differences are really interesting, especially in an industry that is both global and highly local at the same time. Now, having worked on more than $75 billion of insurance transactions, what patterns convinced you that technology would fundamentally reshape the insurance industry?
Yeah, so I think when I started the firm, it was really predicated on the fact that insurance is a huge global industry, $6 trillion, depending on how you're looking to measure it. So it's as large as other parts of financial services. But if you look at the volume of investment going into InsurTech versus broader fintech, it's substantially lower, typically sitting at one tenth. The other sort of key factor is that when you look at the use of technology and the level of innovation, insurance is arguably still 10 to 15 years behind other parts of financial services. There's a huge amount of legacy infrastructure, but at the same time, insurance is so pervasive, it impacts all areas of the economy. It's just too important to be left behind. So those sort of key macro factors was our view that this is a very attractive part of the market, and one where with the right investment strategy can be very successful.
Right. Thank you. And that insight clearly feeds into how you think about investing today. Now, EOS Ventures focuses specifically on insurance technology. What is the core thesis behind the fund?
Yeah, so all of the team, all the GPs have an insurance background. So that's where we've spent the first part of our careers. So we wanted to leverage that knowledge and understanding, and we've got obviously fantastic global relationships that we've built up over our careers. So that really sits at the core of our approach. But over time, we've also broadened the investment strategy. So we now think about insurance at the core, but also related sectors where there are strong synergies and alignment with insurance. So we're really looking to invest at the intersection of insurance and these other parts of financial services where we can bring to bear that deep sector experience. So typically our approach is quite esoteric. The deals we do are often not in market, and we're looking for areas where there's that overlap. There may be less competition from other investors because it's a more complex, highly regulated part of the market. We focus on Series A stage companies. So we're looking for a degree of traction before we invest. And as I said, also the other key part is to have that global mindset and approach, because we know there's some fantastic businesses in Asia and India and other parts of the world. So UK, Europe, and US, clearly very important, more mature, but substantial opportunities in those other areas. So building a global framework and ecosystem was sort of core to the approach.
Great. It's very interesting to know that the entire team has the insurance industry background. One thing that often comes up when discussing insurance innovation is the complexity of the industry itself. Insurance is often described as complex and highly regulated. Why do you believe those characteristics actually create opportunities for the venture investors?
Yeah, I think maybe there's a slight nuance. I think it plays very well for specialist funds like ourselves, and obviously the sector's gone through sort of various stages of the cycle. So when it was very hot in sort of 21, there was a lot of investment flowing in from more generalist funds, but typically we see less competition. It's difficult. I understand it's very difficult, I think, for a more generalist investor to understand the nuances of such a heavily regulated, complex market, as you say. So I think that creates differentiation for the companies. It's harder for other companies, non-insurance specific teams to enter those markets. And even if you look at it in the context today of obviously huge focus on AI and LLMs, and there's a big sort of debate around, will the sort of general chat GPTs of the world dominate insurance, or will it be the models that are trained on insurance specific data that end up sort of becoming more valuable in the longer run? So we're more the latter view. Obviously everything will play a part, but I think it creates that nuance, it creates that specialism, and ultimately a strong moat against other companies coming in and trying to replicate your business model.
You're right. I think as you rightly said, the advantage of a focused InsurTech fund versus the generalist is pretty clear. And that complexity also means there are very specific problems that startups can tackle. What are the biggest structural problems in the insurance industry today, and the technology companies are uniquely positioned to solve?
Yeah, I think there's certainly, and without being too generic, insurance has an image of being very conservative, slow. It's often managed by huge organizations. So the analogy of super tankers versus speedboats, I think, is very applicable in insurance. So the agility, pace, flexibility, I think is all critical. When you look at specific areas of the value chain, I think it's really pervasive. Certainly in terms of customer engagement, if you look at the traditional model, the insurer might be engaging with the customer once a year, maybe twice if there's a claim, if it's sort of personal lines. So it's very transactional. So we're very excited about opportunities to create more engaging products and leveraging distribution partners and channels which actually allow the insurer to engage with the customer where they want to be met. On underwriting, leveraging new data sources, a lot of opportunity. So again, the traditional approach is very backward looking, got some huge actuarial models based on a lot of historical data, but it only allows you to make general sort of population trends and how an individual might sit in that overall population. Whereas with the data that's available, we can move to personalized pricing and tailored solutions. And then on the claims front, again, the traditional world, slow, cumbersome. You can spend a long time on the phone with your insurer reporting a claim across several occasions. So we're already seeing that's shifting. So quicker, more accurate claims process, leveraging the available data to offer a fundamentally different sort of customer proposition. So it really is quite pervasive across all areas of the value chain.
Very interesting. And when founders approach you with solutions to those problems, when evaluating new investments, what separates a promising InsurTech startups from one of which is actually struggling to gain some traction?
Yeah, I think It's a great question. I don't know that InsurTech is that different from other parts of broader tech markets. So you won't be surprised that we say team as the most important area that we look at. We're always looking for multi-exit founders, very deep insurance technology experience to bring the two together. If it's just technology without the insurance expertise, I think it can be challenging. So we'd like to see the two coming together. Obviously, it's critical to understand the market dynamics and the role of the large incumbent players and how you can fit into that ecosystem. Sustainable unit economics. We've seen a lot of companies burning through a huge amount of capital very quickly. It's very easy to do that if you're going head to head with, a Progressive or Geico are spending, hundreds of millions on individual advertising campaigns. So yeah, having a clear path to profitability, strong product market fit, and then obviously having that view to exit and thinking through how potential acquirers are likely to look at the business. So yeah, probably the same answer you get across multiple sectors.
Got it. Now let's talk a bit more about the technologies that are shaping the next phase of innovation in insurance. AI is rapidly transforming financial services and insurance specifically. Where do you see AI creating the most meaningful value over the next decade?
Yeah, so it's obviously having a huge impact, as you'd imagine. And I think it's fair to say, for insurance, if you look back at the last 2 years, incumbents were trialing, piloting, looking at AI. It's now shifted. It's in full scale production. It's a fundamental part of the business and the strategy, certainly for the leading players. So yeah, we think we'll see a huge shift. Last month, I don't know if you saw a lot of the listed distribution businesses, share prices all fell because ChatGPT had embedded insurance quotation as part of their sort of customer engagement option. I think it's a little bit overplayed, but it's coming. So we'll see more there. But yeah, it impacts all areas of the value chain. And to my earlier comment, we think LLMs trained on insurance specific data will certainly have the biggest impact in the short term.
Right. And when you look across the insurance value chain, which parts of the insurance value chain are most ready for disruption today? For example, claims, distribution, or risk modeling?
Yeah, it's really, I think across all areas, we're more bullish on companies looking to embed AI into core parts of the value chain. So like you say, underwriting and claims versus say back office automation. There are definitely opportunities there, but I think actually the fundamental shift of those core areas is more compelling. If you look at it in the context of different products as well, maybe that's a better way of sort of how we think about it. So in personal lines, we're shifting to a model where you can engage proactively with customers. You can tailor products and pricing based on their specific individual circumstances. You can facilitate instant and proactive claim settlement. So just a huge shift across all areas. In life and health, we're looking at more personalized, wellness-focused solutions. So you can focus on early identification and prevention of health issues with embedded AI-driven health coaches as all part of a sort of broader insurance offering. In commercial lines, active risk management to mitigate losses, combined with tailored underwriting, which is really looking at the underlying risk characteristics of the policy. So I think it's better to look at it in that context rather than underwriting and claims, and because it's really all areas of the value chain. Right.
Another shift we have seen over the past few years is the relationship between startups and incumbents. Early insurance tech companies often tried to compete directly with insurers. Today, we see more partnerships between the startups and incumbents. How has that relationship evolved?
Yeah, I think it's definitely a good question. And actually, when we first started, our focus has always been more on looking at businesses that supported the industry and worked in that collaborative fashion rather than a pure challenger model. I think it's very difficult to do that in insurance, given the the underlying dynamics. The established brands are so huge. Their marketing spend, there's very few companies that have been able to create sustainable market share at a sustainable unit economics against those kind of players. Interestingly, the majority of our LPs are insurers and reinsurers, so they're investing in us to leverage our ecosystem, get access, meet the right companies, get the strategic insight from being part of our ecosystem. So yeah, our model has always been built around that sort of partnership driven approach.
Great. Now that evolution also shows up in the types of companies you choose to back. Are there portfolio companies or recent investments that illustrate the type of innovation you're most excited about today?
Yeah, I think there's a couple maybe I'll mention just to sort of illustrate our approach. The first is Bamboo Insurance, which is focused on the Californian home insurance market. And I think the observation here that maybe see this across our portfolio is the businesses we invest in don't have to be right at the cutting edge of technology. Bamboo had just very strong fundamentals across distribution, underwriting, product. We invested in that business 3 years ago. They just sold to CVC for 1.8 billion. So I think it's one of the largest private company exits in insurance. Incredibly strong GWP growth, very profitable. But it just focused on doing the right things in a dislocated market, and leverage technology in a smart way to drive strong profitability. So yeah, if you get it right, it doesn't have to be right at the very bleeding edge of technology.
Right.
Second is a company called Fountain Life, which is one of the leading longevity platforms, and I illustrate that because again it's at that intersection of insurance and other parts of the sort of broader ecosystem. So the ability to take the learnings from prevention, prediction, and embed that into life and health insurance is very interesting. That business is going from strength to strength, opening a number of new clinics and centers this year. So we expect big things from them. And then the final area was just around cyber services, where we've made a number of investments. We have a business called Phoenix, which is doing incredibly well, going from strength to strength. And again, it's that interplay between insurance and related sectors. In terms of cyber coverage, the biggest driver of loss is business interruption. So if that can be mitigated through, active measures and getting companies stood back up more quickly in terms of breach remediation, it can have a huge impact. So you're almost playing a double, you benefit of, two revenue streams: companies itself, obviously, that need the cyber service and the protection, and then the insurers that get a significant benefit from being able to support their customers more proactively. So yeah, that's hopefully illustrates how we think about how insurance intersects and touches other parts of the broader economy and where we can see potential investment opportunities.
Great. Really amazing journey of these startups that you've mentioned. Now, when you look across the EOS Ventures portfolio, what characteristics do the most successful companies tend to share?
Yeah, I think some of the points maybe we touched on earlier, but certainly we're very focused on investing with multi-exit founders, so people that have gone through this process. Everyone knows how difficult it is to run early stage companies, so that experience is fundamental. All of our companies have deep sector expertise. They're often in that kind of, as I said, a lot of our deals are off market, so they're not widely understood. We sort of find them through our relationships and our networks, when we develop the opportunity proactively. They all have sustainable unit economics, and that path, they don't have to be profitable when we invest, but we're looking for a path to profitability. So we're not funding a black hole. So the business model that links to that is obviously very important. And then the final point is often the exit path is, if not clear, we've got some very strong ideas around how and who is likely to acquire the business. So we're kind of positioning the exit almost very early in terms of the investment approach.
Right. Beyond capital, how does EOS Ventures support founders as they build and scale companies in such a complex and regulated industry?
Yeah, so we're very hands-on as an investor. So we lead and co-lead on all of our deals. So we're typically on the board, which is only one aspect. So obviously that supports, sort of governance and sort of broader oversight. But we're very engaged with our CEOs, supporting across all aspects of the business. Obviously, we've got great relationships and connections into the industry, so we can help finding additional capital, distribution partners, new product opportunities. We're global, so if companies are looking to move from UK to US or vice versa, we've obviously got the relationships to support. So, yeah, we always took the view that we'd rather have a slightly smaller portfolio, which allows us to be very engaged with the companies rather than just make a spread of investments and sort of play the distribution curve. We've seen we were able to shift the the return curve through being very engaged with the companies.
Great. I'm really amazed by the kind of mentorship that you provide to your portfolio companies. To wrap up, I'd love to end with a couple of founder-focused questions. If a founder approached you tomorrow with an InsurTech startup, what is the one thing you would ask him to focus on before raising the venture capital fund, the first round?
Yeah, I think for us it's just about getting the fundamentals right. So as I said, I keep saying, the team keeps coming up, but it's so important. So the right people, and having a very clear understanding of the value proposition and how the business is differentiated against the competition and the sort of established ecosystem. And then ideally as well, some early traction and product market fit to give some confidence that the business is off to a strong start.
Right. And finally, looking a bit further ahead, if we fast forward 10 years, what do you think will look fundamentally different about the insurance industry compared to today?
Yeah, so I think, actually at a very interesting point. You could make an argument that insurance hasn't really changed for 300 years. If you look back to, early days of the London coffee shop where they were ensuring that the shipping, you still see people walking around Lloyd's carrying large bundles of paper. So yeah, it's really been very sort of consistent, I guess, over a long period of time. But we're at a tipping point. AI, as you won't be surprised, is the key driver. So I think, we see a strong transformational shift. AI native organizations, probably still seeing human in the loop. I don't know about in 10 years time, certainly in the next 5 years, but maybe going forward, that also changes. Faster, cheaper, personalized products. That's the transition to prediction, prevention, active risk management. And I think importantly, insurance is no longer an isolated experience, very transactional, but it becomes part of an embedded financial health, wealth planning approach. So yeah, I think we're going to see an very interesting period.
Great, excited about it. Sam, thank you so much for sharing your insights. This has been a really useful conversation. It's fascinating to hear how your experience working across global insurance market and advising on large-scale transactions has shaped the way you think about the venture investing today. Of course, insurance is one of the largest and most complex financial industries in the world. And yet it's clear that technology is opening up entirely new opportunities for innovation across underwriting, claims, distribution, and risk modeling. Your perspective on how startups can navigate that complexity work alongside incumbents and build meaningful solutions for this industry is incredibly valuable for founders and investors alike. Thank you again for taking the time to join us today and share your insights on the future of insurance tech. We look forward to seeing how the companies backed by EOS Ventures continue to shape the next generation of the insurance industry. Thank you so much.